Good evening, everyone, and welcome back to Your Nifty Guy. I hope all of you are doing well. So, today was one of those sessions where discipline beats excitement because the market moved exactly the way we had planned. No noise, no guesswork, just clean execution and respect for structure. If you missed today's move, the only reason can be your unpreparedness, nothing else. We'll discuss that shortly, but today's video is a little special. As we close the final trading day of the year, it's the right moment to pause, reflect, and acknowledge what this year has taught us as traders. This year wasn't about chasing every move, it was about patience, consistency, and showing up every single day, but with a plan. In this video, I'll quickly touch upon how today's plan played out and then share a brief reflection on the year gone by, what worked, what changed, and what mindset truly made the difference. We'll also make the trade plan for tomorrow. So if you have been a part of this journey, make sure you stay till the end. Hit the like button. And if you're serious about improving your trading process going into the new year, subscribe to the channel. Let's break it down. So today, like we had planned yesterday, I had clearly mentioned that I, being an aggressive trader, I will be looking at an entry right above this particular high, which was yesterday's high with a pullback. And safe traders can look for an entry above this particular zone. Now, markets opened with a minor gap up around 30 odd points, if I'm not wrong, and immediately went up, gave me this pullback which I had wanted. This out here, this candle, 10:30 candle, at the break of this high was my entry. Yes, of course, the stop loss was a little bigger, but then again, the plan that we had made was very, very simple. If you did not want a bigger stop loss, you could have waited for a small pullback or retracement, and this good inside bar with the low of this green candle could have been taken as an entry trade as well. But then I stuck to the traditional method of keeping my stop loss below this particular swing, or in case if we see a breakout failure of the day's high, I would have exited somewhere around here. But then initial planned stop loss was around this particular level. My entry was at around 145 odd levels on the option chart, right? On the option chart. Out here, as per the trailing stop loss method that I use, this was a exit on the spot chart, but on the option chart, because of the VIX being crashing again today, the VIX was in negative. This was right at my cost, right? So it did not make any point for me to exit it right at cost just because it was not a trailing stop loss, right? You hit a trailing stop loss when you are in profit and you are simply getting out of the trade by hitting your trailing stop loss and protecting the gains that you have made. But then because it was right at my buying point, exactly at my buying point, it made no sense to get out at that particular point, and I wanted to wait and observe how the prices are reacting around that point. And markets could not have been anything but kind on this last trading day of the year. Markets went up like anything, respecting our uh, plan, the trade plan or the setup that we had done or planned in yesterday's video. I exited on this particular candle because the swing low was kind of broken and looked like a double top kind of a formation with this big red candle. I exited around here, capturing 68 odd points. If I would not have exited, again, the profits would have been more. But then again, this is what it is about in the world of trading is to respect your setup. And when your setup says get out, you get out, right? So in all, I would rate a very good trading day. So I did not get any trade for the last 2 days, and today, in one trade, I captured 68 points. So that is the power of uh, planning your trades and then trading your plan, right? We were already ready with the trade plan. I had very, very explicitly told in yesterday's video that I am taking yesterday's candle as a very positive candle. We were at a support area, and this was the plan based on that setup. And I am glad it worked wonderfully. So, off late around this entire year that has gone by, Nifty specifically has been acting very, very weird, and it was very, very difficult to trade it compared to the previous years or the time that has had gone by. Especially the last couple of months has been very, very volatile. And being an option buyer, finding good and quality trade and high quality, high probabilistic trade setups were becoming very, very difficult. But I'm glad the way Nifty has given us a closing to this the end of the year on the last trading day. A very good move, in fact. And today will take a pause, and I'll also reflect on why I highly speak about investing into the Indian equity. So I am heavily invested. Me and my family. Core, we invest a lot in the Indian equity market. Now, the reason for that is the mother of all charts, which I'm about to share with you guys or show you guys. So this is I'll hide all the drawings. So this is Nifty on a yearly time frame, right? So far what we have done is max to max we go on a monthly time frame or on a weekly time frame for our analysis, of course, because we are planning our intraday trades. But then this is the yearly chart of Nifty, and if you can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 beautiful years of Nifty being in the green. And that is the reason why I have also made a dedicated video on how to go about and start your investing journey if you are not invested in the Indian stock market, because trading may give you intraday profits or some profits, but it is investing which will give you the wealth, which will compound uh, your money for you. And look at this beautiful chart. So, right, Nifty has exactly been so India being one of the emerging markets in the world, and of course, this is like we say, I'm bullish on the Indian market, and exactly what is being reflected in the charts as well. And if you invested at any of these points, so I started my investing journey in 2017, right? Uh, Around these levels. I still have stocks which I had bought around these period in my portfolio, and look at where Nifty is today. And the stocks have given bonuses, they have splits, the quantities have increased. I have added on to them based on a smaller time frame chart. So this is the time yearly time frame chart. On those smaller time frame charts, whenever I have seen those stocks which are strong and in my portfolio, I put it down in my notes under the heading of BOD, which is buy on dips. And whenever there are red days in the market, right, when there is panic everywhere, right, people are scared what is going on, the world is going to end, those are the days when I have added those quality stocks. And again, this is simply showing the preparation that I have in my mind, right? So I analyze those stocks, my portfolio, which is there, the charts of every single holding that I have every 2 weeks or twice in a month. I do that, and it is with that kind of a preparation when you go ahead, you build generational wealth. So. The only reason of showing this chart, of course, this is not for our intraday trading purposes, but then showing you the power of investing in Indian equity markets. Of course, you need to diversify your portfolio. So also invest in gold, real estate, if possible. Uh, you can also invest in debt bonds and anything else which will help you diversify your portfolio. But then again, majority of my investments go into the Indian equity market. I will say around 75% would be what we as a family pump into the equity markets every single month, right? We make sure that we do not miss out. So you invest at any particular level. So when the markets were around, say, for example, after the COVID, around 2021, people were like, markets are at an all-time high, should we invest? But if you compare and look in the retrospective frame of mind, market has still moved up from there, right? So you never know that the market is in an over bought category, and it cannot move any further. The markets will surprise you. Trust me on that. And India, as an emerging economy, as a leading economy in the world, uh, I, like many other investors, I'm bullish on India, and hence the purpose of showing this chart was trading is separate. Investment should be a key part of your overall relationship with the stock market. If are new to it, if you do not, or if you want clarity, or if you're already doing it and you want some more clarity on it, so there is a separate video on how to go about investments. You can go through that. Now, on the daily time frame, now we'll be planning the trade plan for tomorrow. I personally, I don't think I will be trading tomorrow. And if any of you is planning to have a party, right, a New Year celebration party, I would suggest take the day off tomorrow. rest, enjoy the day off, spend the first day of the year with your family, spend some good quality family time. That is what I plan to do. I had a good year-end closing day, good surprise from the market, and I am planning to take a easy day tomorrow. As it is, like I had spoken about yesterday. So after a couple of trending days, there are a sideways day. So today was a good trending day. We can expect some sideways momentum as well tomorrow. So I will personally refrain from trading. But then if anybody is there, we will definitely be making the plan. That is a habit and that should not go. So on the daily time frame, if we look. Broadly speaking, yes, we are in a sideways range, 4 hourly time frame. Perfect. We'll also be drawing this particular trend line, right? Okay, perfect. So if you can see, market has from this particular trend line from where first fall came in, second fall came in, and even today when once the market approached these, I have drawn this particular trend line right now, right? Even in today's live market, this line was not there, but you can see the first kind of uh, little bit sell-off which also came in or profit booking which came in from exactly around those levels, right? Now, if we speak about the trade plan for tomorrow, we don't need this level anymore. On the daily time frame, market has once again beautifully respected our fib levels, like we had mentioned. We bounced off quickly from here. Tomorrow's trade plan should be very, very simple. Above today's high, we'll also be above this trend line which is coming in. We should plan for a long trade, and I'll use the hourly time frame because I'm getting very perfectly clean swings on the hourly time frame to mark our fib support of the point 0.5 to 0.618 zone. Cool. Coming back to the 15 minutes time frame, if we open the gap down or we come around these levels and we see some buying, we can plan a long entry. Below this, we are short. I am removing the daily fib levels. It has done its job. We don't even need these lines. Below this, we are short. Plus, I'm expecting some sideways momentum tomorrow. So, out here, in case if we are in this range, make sure to avoid taking active trades. But then, if you are getting some clean setups, definitely go for it. If you are fresh enough and not hung over from the New Year's party. So, yes, this will be my simple, sweet trading plan for tomorrow. And with that, we close not just today's session, but an entire trading year. Remember, markets will always give opportunities, but only those who respect process, manage risk, and stay patient are able to stay in the game long enough to benefit from them. As we step into a new year, don't aim to trade more, aim to trade better because consistency doesn't come from big wins. It comes from doing the right things repeatedly, even when it feels boring. Thank you for being a part of this journey. We reset, we refocus, and we come back stronger. See you in the next video and in the new year. Very happy new year in advance to all my viewers and subscribers. I wish you all the best for the next coming year. This is your Nifty Guy signing off for today and this year. I will see you tomorrow. Cheers and thanks for tuning in, guys.